Billions of dollars in wealth have evaporated following one of the worst days for stock markets since early in the pandemic. The sell-off started on Wall Street, where the blue-chip Dow Jones index fell 3.5%, or more than 1,100 points. Shares on the NASDAQ and S&P 500 indices were also down 4%. The declines were triggered by fears over slowing global economic growth, coupled with a rapid rise in consumer prices. American retail giant Target reported first-quarter earnings that fell short of market expectations. Walmart results were also equally disappointing, leading to the biggest drop in its stock price since 1987. Meanwhile, in Asia, Japanese and South Korean shares tracked losses in the U.S., while markets on the Chinese mainland were mainly flat. So for more, let's go to Victoria Scholar, Head of Investment at Interactive Investor in London. Welcome back to the program, Victoria. Now, could you put this stock market rout into context for us? How bad is it compared to previous bouts of volatility that we've seen?
I'd say it's pretty serious. We saw Wall Street's volatility index, also known as its fear gauge, called the VIX, jump by nearly 19% yesterday. We've seen that turmoil extend into the European session this morning, with the FTSE 100 down by around 2%, and Asian stocks were also tumbling. And like you say, US markets suffered their worst decline since 2020, when we were at the height of the pandemic. And it was 98% of stocks in the S&P 500 which fell yesterday. So very much a broad-based sell-off, with the index itself shedding about 4%, the biggest one-day slide since June of 2020. We saw some of the tech stocks hit hardest, like Apple, Nvidia, and Amazon, all sinking by more than 5%. So yeah, pretty serious.
So you say 98% of stocks in the U.S. in the red today. What are investors so worried about?
Well, it's a series of reasons, but mostly around concerns about inflation. And that was really laid bare by the results from Target, which saw its stock slump 25% when it warned about squeezed margins because of rising fuel and freight costs, which have fueled inflation concerns once again. And we can see that the inflation problem is really taking its toll now on corporate America, and that clearly will filter down to the consumer. And we had a similarly bleak outlook from Walmart, suffering one of its worst sessions since the 80s. And then we had more pressures overnight in China, because we saw Tencent slump sharply after it reported its slowest revenue growth on record. And then Standard Chartered cut its growth outlook for China amid its deteriorating economic outlook. So as you can see, there are a lot of factors to be concerned about, and it all stems around the risk of stagflation, which is the prospect of spiraling inflation on the one hand, combined with slowing growth, which is what Treasury Secretary Janet Yellen said she was concerned about this week.
So you mentioned slowing growth, but can we take it a step further? Are we at risk of actually falling into a global recession because of all these factors that are weighing down economies around the world?
I think the risk of a global recession is definitely rising. If we look at the economic data, this week we had Japan's first quarter GDP, which unexpectedly contracted. Recently we had UK GDP log a surprise contraction in March. US GDP also unexpectedly shrank in the first quarter. And then, of course, we've got China's zero COVID tolerance policy, and that's created some patchy data there too, with disappointing retail sales and fixed asset investment. All of that, combined with the rising rate environment around the world in order to temper inflation, could also take some of the heat out of the global economy. So unfortunately, the risk is real and actually becoming more serious.